Greetings, members, one and all of the Salivation Nation. A big bank settles a scandal for almost $3 billion. What does this mean for silver and gold manipulation? Let's explore. That's right. Though this particular settlement of about $2.9 billion that Goldman Sachs ponied up for this particular scandal had nothing to do with precious metals, I think it tells us a little bit about what some of these banks have been able to get away with and what they can afford to get away with. And as part of this deal, the bank will admit to wrongdoing. Now let's go through some of this and we'll talk about how it relates to precious metals here momentarily. This information I've seen on the headlines, but didn't really figure it was useful to do a video on it since it didn't have anything to do with precious metals. But when you think about it, there really is a tie here, and I'll talk about that momentarily. Some of you in the community have also shared this with me. And before we do continue on, I want to encourage you to hit that little dark gray button that has the thumbs up on it. If you hit that, it'll turn blue. And that will make me very happy because that means it'll get the algorithm out there, hopefully, and more people will see this because I think it's important information here. As from Investopedia.com, says that the U.S. Department of Justice has been very busy lately. It had announced that Goldman Sachs agreed to pay more than $2.9 billion to regulators to resolve probes into its role in what is known as the 1MDB scandal, involving the government of Malaysia, a corrupt investment fund, which is called 1MDB, and a subsidiary bank owned by Goldman. And this is kind of what we saw with the Wolf of Wall Street. If any of you ever have seen that movie, it's actually a really good movie, and it gives us some of the same indications, kind of what was going on there. In 2012 and 2013, Goldman helped raise $6.5 billion for 1MDB by selling bonds to investors. The Department of Justice says much of that money was stolen by an advisor to the fund named Joe Low, abetted by two Goldman bankers and associates in the Malaysian and Emirati governments. Some of the money raised went to fund The Wolf of Wall Street, the Oscar-nominated blockbuster directed by Martin Scorsese. I've heard that name, and I forget how to pronounce it, which starred Leonardo DiCaprio as Jordan Belfort, which grossed $392 million in the box office. So, wow. So we've seen the actual Wolf of Wall Street, which talks about corruption, was funded by corrupt money. Go figure. The producer of the film, Riza Aziz, who is the stepson of former Malaysian Prime Minister Najib Razak, has been charged with embezzling millions of dollars from the Malaysian government. He reportedly gave DiCaprio the Best Actor Oscar trophy Marlon Brando won on the waterfront in 1955 as a gift worth an estimated $600,000. DiCaprio was forced to return the gift as part of the investigation. Bummer. Goldman didn't just have to write a check and move on. In an unusual move for this type of settlement, Goldman had to admit wrongdoing. Well, at least there's a little bit of responsibility taken here. Goldman Sachs today accepted responsibility for its role in conspiring to bribe high-ranking foreign officials to obtain lucrative underwriting and other businesses related to 1MDB. Acting Assistant Attorney General Brian C. Rabbitt of the Justice Department's Criminal Division said in a release, "The announcement, which requires Goldman Sachs to admit wrongdoing and pay nearly $3 billion in penalties, fines, and disgorgement, holds the bank accountable for this criminal scheme." CEO David Solomon said Goldman is pleased to conclude the process and put these matters behind us. He noted that the investigation emphasized that everyone at the firm must take responsibility for each other's actions and adequately address red flags. Nearly 2 years ago, I said to all of you that our obligation is to be self-reflective and self-critical. That is more important than ever today, Solomon said. Well, I think that's going to be met with some not very enthusiastic, listening, because it's like, yeah, we've heard this before, and will it really? Is it just lip service? Goldman Sachs wasn't the only one paying up. As part of the settlement, former CEO Lloyd Blankfein and Solomon had part of their past compensation clawed back as part of the restitution payments, according to the Wall Street Journal. The clawback was enforced because the Department of Justice said Blankfein and Solomon, who were the CEO and COO respectively at the time, did not properly oversee their bankers. The details of those clawbacks were not disclosed. Solomon noted that the action regarding compensation of current and former executives is entirely appropriate under the circumstances. So when you have over $2.9 billion to regulators resolve this role and to admit wrongdoing, it tells us something. You may have seen where I posted a story about almost $1 billion had to be paid by JP Morgan for its role in spoofing and the precious metals markets, this form of manipulation. And that's $920 million being paid out, but no admission of wrongdoing that I saw. No jail time, and in this case, there's no jail time either. But Goldman Sachs does have a sex scandal on his hands now with the top lawyer. This is late breaking news, by the way. And so this tells us, though, that the banks, well, they have deep pockets, right? And they have deep pockets indeed. And when they manipulate precious metals markets, they're doing it for their own self-interest. Some of these guys are, or for their, in the greater whole of the business, or for the organization from which they do it, and they can afford to pay big bucks to avoid prison time or any other kind of problems. Now, you would think this would hurt their reputation, but perhaps not, as they're going on about their day and accumulating more money and manipulating metals or what have you. But I think this is a pattern we're seeing. Big banks get caught, and what do? They settle. It's much easier. They can afford to do so. But I believe there ought to be new rules. And I've mentioned this many times, and even as such, and even though I don't buy a massive cabal and conspiracy of manipulation to hold the price of gold and silver down, I do believe when they do mess with the markets, and they do mess with the markets for sure, that's proven. It's never been denied by this channel. I get accused of being in with the big banks, and that I'm somehow some sort of puppet for the big banks out there. But no, I believe any illegal activity should be punished with not just a fine to compensate anybody who has lost out in some of the transactions, but also prison time. These white-collar crimes sometimes can really hurt people financially, and can lead to people getting physically hurt too in some cases. And so my guess is that there ought to be some other way to punish other than just having to pay a fine from the company. They ought to be fired, not be able to work in the industry for a long period of time, depending on the severity of the manipulation that has occurred or the crime that has occurred. Make it appropriate. Just having the bank pay out a whole bunch of money and not the people involved with it getting punished. I think that's where they need to draw the distinction there and make it right with the people, the victims of these crimes. These settlements are a start, but there's really a slap on the wrist when they have so much money. I don't know what the books look like for Goldman Sachs. Is $2.9 billion a lot of money? It is to any average person, or even to any average millionaire, or even a billionaire. It's a lot of money. But to a big company or big bank like that, it may not be that big of a deal. So therefore, the time must fit the crime to some degree here. It's a pretty big deal. You're messing with so many different accounts, especially with this one MDB or scandal or what have you. So how will that relate to how they are dealt with? I think they'll be under a larger microscope now. That's one good thing that will come out of this. The regulators, the Department of Justice has their eye open for looking at things like high frequency trading and ways to be able to try to manipulate the markets at any given hour of the day. And because that's where it happens. Typically it occurs at a particular time where they can smack the prices down when people aren't looking, or smack the prices up when people aren't looking, and be able to profit off of those trades, or lack of trades, or pull back in order to gain a profit from trades or lack of trading. So those are the kinds of things you have to look out for. And I think that now the authorities, enforcement, are looking at and monitoring the situation. And they're wise to them now. Hopefully are wise to them, at least to some point. Because most of the stuff that we've seen with regards to manipulation and stuff happened years ago. The last of it I've heard was in 2016. So we'll see. I mean, I'm sure some of the technologies have changed since then. But nonetheless, I think this is a wake-up call for banks around the world with this type of thing and how they are doing it. There's two messages here. Number one, the banks can get away with something if they pay enough money. But on the other hand, it also sends a message that the banks had better be careful, because more and more people are going to get wise to it and not deal with them, and or they are going to be monitored more closely by regulators. And if they do have issues and problems, the punishment may shift to actual jail time. We'll see how it plays out. Regardless of what they do, one thing for sure that we can do is we can hold physical gold and silver. Get out of the banks altogether. That includes SLV, GLD, the paper, the ETFs. Nothing against having those, but I believe those can be manipulated. When you have the metal in your hand and you hold it in your hand with the intention of holding it for the long term, you are essentially protected from whatever they do to manipulate the price or spoof or whatever shenanigans they may do, because they cannot manipulate the physical metal itself. And unless you have to sell in an instant at the exact same time that they smack the price down at a certain high frequency trading, more likely you're going to be okay. And they can only do so much. But overall, gold and silver are going up, especially gold. And I think that it is something that we can certainly rely on as a wealth protection device over the course of a period of time. If you play your cards right and make your purchases in a smart way, I think you'll do very well. So there you have it. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.